Hello traders, this is the Zigzag Man, and today's lesson is going to be about a gap and run. As you can see, FAS, the 3 times ETF for the financial sector, closed at 270. I'm zooming in here. This is the black line here is the close. The close on Monday and the open on Tuesday. Okay, so let's talk about Tuesday. Okay, FAS closed at 270 on Monday, and then on Tuesday he opened up at 316. So that was a 46-cent jump on good news for the financial sector, since FAS is the three times ETF for the financial and the banking sector. There was some really good news that came out Monday night and early Tuesday before the opening bell. So in our previous lesson, I talked about the gap and trap, where they gap up 46 cents and immediately come down to fill the gap. Now this is called a gap and run, because it gaps up and starts going up immediately to a high of 345. Okay, so he opened at 316 and ran another 30 cents. Now at this point, you know it's not a gap and trap. What he did after that, after the gap up, the rise, is he consolidated in an uptrend and he held above the 15 MA, and he also held above the middle Bollinger Band area, which is bullish. Okay, so the high right here was 345, the high right here was 345, and right here the high was also 345. Now that's where I jumped in, because it looked like he was about to break out. He got a little bit of volume, okay, at 1125, and this was 1130. So I jumped in at 1133. I bought 2,000 shares of FAS at 344.99. Let's say 345. And for the next 10 minutes he pulled back a little bit. 339. I was only down a few cents here, and then the volume came in and I knew he was going to break out. Now it's a very bullish chart pattern when he gaps up, goes up, consolidates in an uptrend, and at the first sign of volume, know he's going to break out. Okay, so I was in right here at 1133. At 345. Okay, so 5, 10, 15, 20 minutes later, he finally got the volume I needed right here on this candle, which was the highest almost of the day, and it sent him up to 365. So at that point I was up $400. And at that point I just decided to hold it the rest of the day because the news was so good. I'll get to the Citigroup news here in a minute, but that's a lot of what happened. As you can see, he closed at 373 on the day. I was in at 345. Okay, so that was a 46-cent gain at the end of the session. And let me think. 345. No, it was a 29-cent gain. 375 minus 345. That was a 28-cent gain. I was up $560 on my 2,000 shares. Okay. And in the after hours session, he ran all the way up to a high of 393, and since that was 20 cents higher than the close, I decided to go ahead and sell them 10 minutes before the after-hours session closes at 8 p.m. Eastern. So at 7:48:38, I sold my 2,000 shares at 391. So I was in at 345. I sold at 391 with 2,000 shares. That was a 46-cent gain, or a $920 profit. Okay, so that's what I made on that one. Now, the reason I did all this was because of Citigroup. Now, here's Monday's close on Citigroup at, I think it was $1.03, and he opened up Tuesday at 124, and right at the open, because the CEO, Mr. Pandit, came out and said that this was the best quarter for the last 2 months. First of all, for the last 2 months, Citigroup has been profitable, which is understandable because they're getting money from the federal government at 0% to loan out, so it's not hard to be profitable. But he also said it was their best quarter so far in the last 6 quarters. So right at the open, 8 minutes after the open, I bought 2,000 shares at $1.28. Okay, and he just, no gap and trap. This was a gap and run. He gapped and he ran up. Then he consolidated again. He did the same thing Faz did right here. He consolidated. These two charts look very similar. They popped at exactly the same time because they're tied to each other. The pop came on this one at 11:50. The pop came this one at 11:55. Right. Okay, so it was the same time. I was in at 128, and as you can see, he closed the regular session at 145. So, zoom back out. Now, one thing you're looking for, both of these charts look very similar. Look at the Bollinger Bands, the red bands here. Okay, they squeeze together. They're holding above the middle Bollinger Band area, here and here. They never came down to touch the lower Bollinger Band. That's very bullish. The volume came in at noon. It started to build just before noon, and right here it started to build right before noon, and you knew it was golden. So there was the pop on the volume. There was the pop on the volume. Now, on a longer term look, this one went up all day, and basically so did he. Now, these little spikes here are called fill and kill orders, where a big institution comes in and wants everything they can get at any price they can get it. Okay, so I was in at 128 at 9:38. He closed at 145. That was a nice gain, but just like on Faz, I decided to sell it right at the end of the the after-hours session, because he just kept going up and up and up and up and up, and I sold him at $1.59 in the last minutes of the after-hours session. Right there at 159. I sold him first, 1 minute before I sold him. Okay, so I was in at 128 and I sold at 159 with 2,000 shares. That adds up to 2,000 right there, for a gain of 31 cents or $620. Now add that to the $920 I made on FAS. I made $1,540 yesterday on these two trades. I was in FAS at $3.45. I sold them for $3.91. It's a 46-cent gain. I bought Citigroup C at $1.28, and I sold them at $1.59 for a 2,000 shares of him for a 31-cent gain. So $620 on Citi, $920 on FAS, $1,540 yesterday. It was a very good day. But that's because I pay attention to the news. So this is an example, and this doesn't happen very often. Usually it will be a gap and trap. But this is, you have to understand the news. You have to know that the news was exceptionally good for the financial sector. And in my video chart of the daily and weekly chart of the Dow, I put out on Saturday for Friday's close on March the 6th, 2009. I quite clearly stated that I was looking for good news for the financial sector, and if we got any of it, I would be playing FAS or SSO or the banking index $BKX. But I played Citigroup instead because of the fantastic news they got just before the opening bell. That's why I watched CNBC. It was very clear to me after hearing that news I had to have him at the open. And I was afraid it would be a gap and trap. And I had enough money to buy another 2,000 shares down here if he came down to fill the gap, because I wanted him. I wanted to hold him. But now, you know, basically a day trader, and I'm glad I sold my positions, because right now he's unch in pre-market. We have an hour to go before the opening bell. FAS is a little bit higher by about 5 cents, and Citigroup's a little bit higher by about 4. But if the futures had been down in the morning, he would have gone down in the pre-market session. So basically this is the inverse of a gap and trap. It's called a gap and run. You have to be paying attention to the news. You have to know what's going on in the world. And when Citigroup comes out and says, we've been profitable for the last 2 months, it's the best quarter in many quarters for us, this will be a good quarter for us, you want to go ahead and buy him, because he's so beaten up. You know, when you look back at Citi, it was at $1.03 at the close on Monday. Let's look at a 3-month chart. He was at $8 3 months ago. 6 months ago he was at $22. A year ago he was at $27. So from $27 to $1, might as well grab some. You know, you could buy 1,000 shares of this and put it away for a couple of years or a year or so, and you'd probably end up doing okay. So, not a bad day. I'm not calling this a bottom on the market at all, but you know, it's always good to make a play on good news. You know, it's a pretty good day for him. He got real good volume. That's a 1-month daily chart. Got a buy signal on the CCI. He's coming out of oversold. Accumulation's way up. On balance, volume's way up. Chaikin money flow's way up. He closed above the 5 moving average for the first time. You know, my strategy works on daily charts, weekly charts, hourly charts. And it's good for day trading too on the 1 and the 5 minute chart. Okay, so that's the end of this lesson. Oh, by the way, he had over 1 billion shares traded on yesterday. 1.1 billion shares. You know, compare that to This is half of that. So high volume on a good up move, nice green candle, not quite a hammer because the body's too big and the lower wick's not small, long enough. But you know, looks like a good one. Okay, well that's about it. You have learned in the previous lesson about the gap and trap, and this lesson is about the gap and run. Look for the news. Pay attention to the news and you can have a profitable trade too, just knowing that it was good news. I mean, look at that accumulation line right there. People were just buying them all day. So, all right, I want to wish you all happy trading from the Zigzag Man. Good luck with all of your trades.